And welcome back to Trade Talks. My name is Lena Farr. I'm your producer and host. Joining me today from the Market Intelligence Desk for a daily recap is Mike Sokoll. Thank you so much for joining us.
Happy to be here.
So let's kick it right off with some headlines. Talk to us a little bit about what the markets did yesterday.
Yeah, yesterday we had a bit of a relief rally. It all has to be taken in context of what's happened over the last couple of days, whereas you came in Monday and the Chinese had retaliated to our trade tariff talk, so we were down 600 points. So yesterday we retraced about a third of that, so it looked pretty good. This morning we came in, however, and there was some weak retail sales numbers, and that initially anyway moved the markets lower.
Right. So retail sales numbers, tell us a little bit more about that. What were the expectations and how did they compare to the actual results?
Yeah, so retail sales for the month of April came in at 0.2%, the headline number. They were expecting a flat number. And then if you exclude autos, it was only 0.1%. They were expecting 0.7. Keeping in mind, the month prior, we had the strongest number in many, many months. It was 1.7% gain. So I think it was a little bit disappointing. However, you did have Macy's beating. You do have Walmart coming in tomorrow, so there might be some offsetting numbers from the stores directly. But in any event, the path of least resistance for the stocks, given all the other uncertainty, was down when you saw those numbers.
Absolutely. Now, we have a couple of charts as well to take a look at. So let's start with the S&P 500 here. And what are we looking at here? Yeah,
so this is the context. If you go back here, and you have to go back almost to last week, you can see that the market had sold off. This is when initially when China had retaliated going into Monday. Yesterday we gained some back and then sold off again. And here we are, if you look further on the chart, as we went into this morning, stocks which had picked up about, like I said before, about a third of the gains, had initially sold off, but then rallied on some additional information on trade focused on auto tariffs.
So certainly seems like trade is still making a lot of movement in this S&P chart right here.
Yep.
And what can we expect moving forward?
I mean, as much as you'd like to focus on the fundamentals and earnings and things like that, we are in a situation, I think, in the markets where you're trying to, like the old Soviet Kremlinologists, just divine what the Fed means in the Fed speak and also figure out what's happening in Washington, particularly where it comes to trade and tweets out of the president. So that's really what's driving the markets.
Yep. So take a look at your Twitter feed. It might give you some insight.
That's probably more worthwhile than anything, yes.
All right, and let's take a look at the sector performance here on our next chart.
Yep, so this was earlier. You can see, and communications actually has a lot of technology stocks in it. So that top two, those sections there, were after the market had rallied. So you could see those risk-on sectors, as we say sometimes, were rallying pretty good. And that was in sharp contrast to just early this morning, where things like the safety stocks were doing well. So this is just a look at how a rally takes place. And here you are with the tech stocks moving higher. And then you can see in the middle, though, real estate staples and consumer discretionary, they had all been the leaders. Those are kind of more your safety plays. Financials was the worst performer, primarily because rates, bonds are doing well. Rates seem to be like they're going to be low for a while. And when you get weak economic data, both here and in China, which I didn't mention, people start worrying about global trade and deflation. And that, of course, brings rates lower and hurts your financials.
And now, if we take a look at the morning rally, is that why we're looking at a lot of green here? Yeah,
so the green is the most outperforming. So 2% in a day is pretty good for a sector. And these sectors had all been under pressure. If you go back a week and compare it to where they were, you're still below where they were. So there's room to rally in these groups.
Absolutely. Well, thank you, Mike, so much for joining us. Give us a rundown of the mid update written by yours truly today.
Yep.
And hope to have you back soon on Trade Talks.
See you soon. Thank you.
All right. Nasdaq followers, stay tuned for what's coming up next. Sector Talks right here from the Trade Talks account.